Hey guys, what is going on? Welcome back to the YouTube series. Welcome back to the Robinhood portfolio. As always, it's great to have you guys back on the channel. For today's video, I thought I'd do a quick update video on the overall portfolio, discuss everything that happened today and yesterday, as well as taking the opportunity to talk about my options contracts. There's quite a few that will be due this week. I'll have to roll those forward. And I thought this would be a great opportunity to talk about exactly what I do with these contracts, as some of these will need to be rolled, otherwise I will lose money. I'll essentially have to buy the stock for more than it's currently worth. Before we do that, let's take a look at the overall portfolio very quickly here. As you can see up on screen, a very good day of trading today. In the green, 3.14%, 21,617. Portfolio value just over 709,000, 709,034. 1 point getting up to, I think, almost 712,000. The 711,300 or so you can see on screen. Did pull back here at the end of the day. And for the week, with today's performance up 3.79%, 25,918. So overall, a very good day of trading today. These are all of the options contracts that are currently active on the account. You can see there are quite a few that will need to be rolled by Friday. So essentially a $12 put contract for Ford, and then some Tesla put contracts as well for 270, 250, and 275. Actually, 275 will be in a couple of weeks. But the 270 and 250 I'll definitely have to roll by the end of the week. So I thought I'd take an opportunity to take a look at these contracts. First one here, Ford $12 put contract. Not a huge contract, only receives $105 to the portfolio. 15 contract, essentially $7 per contract. That's 7 cents per share, 100 shares per contract. So $7 times 15 contracts, 105. Current market value, as you can see in the middle of the screen under your position, market value at negative 225. So if I wanted to buy these contracts back, I'd have to pay 225. 225 minus the 105 is the total return there in the middle of the screen, negative 120. So I don't want to lose money on this particular trade, so I can't really buy these back. I don't want this to be applied to the portfolio. So if I don't do anything, I'll have to buy Ford at $12 per share on Friday. Current value, as you can see on the bottom of the screen there, $11.92. The bottom left-hand corner, $11.92. So I don't want this contract to go through. I'll simply have to push trade, roll position. Then up on screen here, you can see I'll be buying back these contracts at 15 cents per contract. Again, I only got $7 per contract when I sold these contracts off. So technically, I'd be losing $120 as we went over earlier. But I can select a new contract for next week. You can see that same contract or same dollar amount, $12, is 26 cents. So I can buy those back for 15 cents and then sell them off for 26 cents. If I do that, I'll make a net profit of 11 cents per share, $11 per contract. So I'll make 165 on the 15 contracts that I'll roll forward. And that's how I make money per week, is by rolling these forward. Yes, this contract is not high dollar amount, so there's only going to be a few $100s per week, but that still adds up with enough contracts. This $34.50 call contract with Pfizer, I'll simply let this go until Friday. May just let this go ahead and expire. Nothing will happen because the price of Pfizer currently is below the call contract. So for this particular stock, if the price of Pfizer got above $34.50, I'd still have to sell at $34.50. That would be the risk. I'd technically lose money on that trade, but I don't think that'll happen. And if it does, I'll simply roll that forward as I did with that Ford put contract. Tesla 270 put contract. Now, this is where I'm going to make most of my money because these are much higher dollar trades in that Ford trade. You can see currently a negative 11 contracts. That means I sold off 11 contracts. Market value, negative 10,725. So if I were to buy back these 11 contracts, I'd have to spend almost $11,000, 10,725. On the bottom, you can see today's return, 14,883. This is the power of options. They can make or break the portfolio very quickly. One day, 14,000 up, almost $15,000 in the green, 58.12%. Overall return, 10,958. So if I were simply to buy these back doing nothing, I'd still make a total return of 10,958. And all of this is already accounted for portfolio value. So the $710,000 or $709,000 portfolio value, if I simply bought these contracts back, that would not change because all of these numbers are already configured into that amount. That negative 10,725 is already taken out of the portfolio. So if these were to decrease in value, down to zero, that negative 10,000 would go to zero, and my portfolio value would go up by 10,725. So a lot of investors don't realize that, but those are already accounted for in the portfolio. And you can see how much more income I'm making on these trades. $2,000 on the 15th and $810 on the 26th of September. But I can do the same thing with these contracts. They're losing value here. 1 week you can see losing value as well. So you'd get premium here, $25.30 for example, and then you could buy it back here for $12 and make money. Or you can simply do what I do, trade, roll position. You can see if I were to buy these contracts back, it would be $9.75 per share. So that adds up to quite a few dollars for 11 contracts. But I can do a contract next week, for example. If I wanted to simply do that $270, I could put that in and make $12.60 per share, or $1,260 per contract. Let's go ahead and do that. Roll position forward, continue. Now you can see for next week, just 1 week, I'll make $3,135. So you can see the power of these options. It can make quite a bit of income in a very short amount of time. But let's say I wanted to be less aggressive. I could do trade, roll position, select new contract. Because the price of Tesla is $260.57, as you can see in the middle of the screen. Maybe I want to pick something a little bit less, so maybe I want to roll forward, but roll down. So instead of getting the $12.60 per share, $1,260 per contract, maybe I just want to do the $267.50. And that way, when I roll forward, I can roll down and the risk will be less. So you can see I'll make less credit here, but again, I'll potentially save money if the price of Tesla does, let's say, trend down to 230, 220. I'll have a little bit more buffer room when I roll out. So that's how I'm making most of the money on the portfolio. Let's go down to the 250 contract. I can do that same thing. Trade, roll position, new contract. I'd buy these contracts back for $64 per contract, 64 cents per share, 100 shares per contract. If I want to do the same contract next week, let's say 250, I would get $328 credited to the account. Roll forward, continue. I'll get $264. Let's say I want to go ahead and do a more aggressive trade. I could, again, trade, roll position, select new contract. Now let's say I want to do maybe one that's above the current price of the stock. I think the stock's going up next week. Let's go ahead and do one a little bit more risky. Let's do 265, for example. Roll forward, continue. And now it'd make $8.91 per share, $891 per contract. So I'd make $8.91 for this particular trade. So you can see how powerful that can be. I can do those for those other contracts as time does expire on those contracts. But for next week, I'll probably just do the ones for 10-6 and save some of these for a number of weeks in advance. So that's how I'm making money on the portfolio here, doing mostly options contracts, but you've seen with Ford, you can make quite a bit of money with dividend investing as well. So I'm trying to do a mix of dividend investing, capital appreciation, as well as some of these call contracts, put contracts in which I sell off, I get premium to the account, and hopefully I can simply exit those positions or roll those forward. You can do this indefinitely if you feel like you don't want to get out of the position. Just continue to roll forward, continue to accumulate premium, and hopefully over time you'll have your portfolio trend up in value. So just wanted to quickly take a look at the portfolio, discuss my options for next week. I'll go into a little bit more detail on exactly how I'm selecting those particular contracts. There is a little bit of a methodology that's involved, but really I'm just trying to make a rate of return over the entire year by rolling these contracts forward. Some I'll roll out per week, some I'll do per month, and some on the bottom there you can see I rolled out per year. It all really depends on some of the metrics behind some of these contracts, which we'll talk on another video. So again, just want to do a quick video here. If you guys do enjoy the content on the channel, feel free to like, share, and subscribe. In the next video, we'll see you then.